Everybody. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments. Well, a little bit of a bid overnight, 4 cent range in corn, up 3.5 cents. March trading 4.30. March beans, 11 cent range, opened at 67, kind of jumped higher, 11 cents. We'll see if we can get more. I'll never complain about a bounce. No real story, just overnight. We've seen this time and time again where there's some interest in the Europeans and the Asians and speculating on the long side in beans. We'll see if it has legs here today. However, guys, it is the highest price for spot beans since Christmas. So, and the highest price for spot beans since the beginning of the year. The bottom of the dump on the USDA report was 1037, 1038. So, hey, we picked up 40 cents off the report, which was very negative. Got to take it where you can get it. How much of a retracement is that? Well, the overall move, if you take the high from November to the kind of the double bottom we have there at 1038, the next upside target you've got is a 38% retracement, which is 1089 and a half. So there's your next target. 1105 will be halfway back. I would love to see that, but the trend will not change in beans. I hate to tell you until we get back above 1125, 1135. This could just be a bounce in a sideways garbage market. Um, I think if you look at 1089, that's not only the 38% retracement of that move, but it's the highs that we had back in June of the summertime. And we had them again in August of the summertime. So, 1089 and a half for March beans. That may be where we're headed. Capital MAY may be. Um, so these are the levels that we're looking at. Take it or leave it. Take it with a grain of salt. Bull or bear, these technical levels matter. I doubt if it's going to be a straight shot up or down. It'll probably be in fits and starts. Now, the other flip side is you got new crop beans also at 1091, right? We were on the after that report, we traded down to 1057. $11 is going to be a big psychological number. That's resistance really going all the way back to September of 2024. So we're getting back up there again where historically $11 new crop beans, at least from a chart perspective, are there's some resistance up there. So I'm one of these people. I don't care why. I just know it's good for farmers and producers. It's why we use puts instead of selling futures to hedge our crop because the worst thing you would be short beans at 1060, 1050, or 1055 down there in the low, and you're sitting there going, "Wow, we're 40 cents higher." Geez, yeah. If we had puts on, maybe we had 4, 5, 6, 7 cents into the puts. The puts are still worth a couple pennies, but the cash market's picked up 40. That is how a hedge is supposed to work. March wheat, Chicago wheat, again, kind of just going with the flow, up 9 cents, up 8 cents overnight. A nice rally. We are about yeah, we're almost at the highest price. Again, we're going back to Christmas. Now, there's a heck of a lot of resistance there at all the way up to 550 um, in March wheat. July wheat, new crop Chicago. It's right there at that stupid trend line again. And I call it a stupid trend line because it is a stupid trend line. There's a trend line that goes all the way back. If you take the high in June of 2025, so last June, we hit it a couple times here in November. We're poking above it. We're struggling through it. But if we can get after it, if we can settle above, I think 555, that opens up the door for at least a potential run to those November highs, the 575, 580 area. So I will take it where we can get it, guys. Let's get after it. And again, I can't say this enough. This is why we use puts instead of selling futures when we hedge. You're a farmer, you're a producer, you're always bet long. You don't want to gum the works up when Mr. Market gives you a bounce. Selling futures or selling calls against puts or anything like that, it just creates problems. We approach this program saying, okay, we're always long. What's the best we can do with that long position? Moving over to the protein complex, we were a little bit lower yesterday. We've paused here at the top in cattle, and I don't know why, but there's a wall up there. We've talked about it. April fats, there's a wall basically at 239. If we can ever pop above 240, people are going to be talking about that old gap up there from back in October at around the 247 area. I'd love to see it. I'm not predicting it, but it is an upside target. For March feeders, again, what's the big number? 365. If we happen to settle above it, get above 370, there's an old gap going all the way up to from 370 to about 375. So hopefully we get there. It's a chart target. We'll see if we can keep going higher. I will say one thing: manage money. Right? Everybody loves to hate the speculators. They're long beans, not a lot, but they're long beans. There's short corn and wheat, not huge. They're short 100,000 wheat, probably about 85,000 corn. So it's nothing that can't get out of the way if they really want to get long. So um, that's what I'd say about that. And lean hogs, you can't say enough about that. Go take a look at deferred hogs. July is trading north of 110, right? It's hard to believe that back in November we were down at 94. So that's a great rally. Take advantage of it. You don't want to be in a situation where we suddenly drop back down to 98 cents and you're like, huh, maybe I should have done something protection wise. So keep your upside open. Everybody wants to be long hogs. The funds are long, the entire protein complex. They're betting with you. This is Chris Robinson, Robinson Ag Marketing, 312 638 8868. Have a great day. Give me a call.